Hello and welcome to BQ Prime. A very good morning to all the viewers. I'm Meeral Dadia. Overall, if you see in terms of markets, clearly a slightly somber move, but we're trying to inch higher from the negative zone already, seeing gains of around 1/10%, trading at levels of around 18,740. There is pressure in terms of Bank Nifty trading with cuts of almost around 0.2% coming in there. But a lot of stock specific action and sector specific moves is what we are witnessing in trade today. Joining us on the show to discuss more is Kshitiz Mahajan, Managing Partner and CEO at Complete Circle Wealth Solutions. Kshitiz, good morning and welcome to the show.
Thank you, Hiral. Thank you very much for calling me.
Kshitij, let's start with the banking space. Two stocks that are in focus that we are tracking right now is Axis Bank as well as ICICI Bank. Now, clearly, in terms of market cap, there is a wide difference, but from a price perspective, it seems one of the two is going to win the race in terms of hitting the 1,000 mark, soon. Both of them are in that range of 950 to 975. That's the band. Where do you see it from here on, and who would win the race?
So for us, both are our portfolio stocks, and both franchise are very good franchise. It is just that ICICI has their leg of run up little early because Axis has done acquisition of Citibank, and there's an upfront payment which has gone from the books. And otherwise, you see both the banks are shaping up very well. Wherein ICICI Bank has worked really hard on their CASA side, on their margin side. In fact, Axis Bank is also catching up on the same. In terms of credit card, they have exceeded ICICI Bank with acquisition of Citibank. They have added 18 lakh more customers. Their wealth book has grown big, and at the same time, they are expanding the branches also. Axis has always been seen working on the branch network as well as extended branch network, which is now in total close to about 7,700, including the branch network. So I'm saying, it's not one against another. Both the franchises are good. Valuation wise, you're right. Axis is a little reasonable vis-a-vis, ICICI. ICICI, where it is at close to about 3.5 book value. Axis has almost close to about 2.56 price to book value at what it is available. So I'm saying it's not one against another again. Both the franchise are good franchise. It can be a part of like as I said, both are part of our portfolios. So one can look at from their research that how they want to play these two banks in their portfolios. But you ask me, these are long-term banks. Any nation, any country which is growing, expected to grow at a nominal GDP of 12-13%, you see the entire banking infrastructure will grow at 15-16% for sure. So the way the adoption of technology is happening, the way they are working on the loan side, look at ICICI Bank. Their 70% of the loan is now market linked. Fixed part is only 30%. Axis has started working on it. Their NPAs have gone down. Both the banks franchise are working hard to reduce the NPAs. Cost of borrowing has reduced because both the banks are working on CASA. So we will see a new trend of CASA war now because that's the most easiest way, or let's say most economical way to raise capital to lend, because current account these both banks don't pay anything, and saving you pay hardly 3.5% to your clients, and then the margins are there. So I'm saying on the margin side also, net interest margin, ICICI has that edge of 4.6, around 4.6, Axis is around 4.3. So overall numbers are very close to each other, and I think both banks will do and should do well. So I can't say that which will hit 1,000 mark. So interesting part is not which will hit 1,000 mark early. I think we should look at is which bank will hit 2,000 mark early. And let's see, Axis seems to be reasonable as ICICI as we speak.
Right. So it's with regards to Axis and ICICI. How are you looking at IDFC first, Kshitij? Because clearly it's inching and achieving new highs on a daily basis. And technically as well, you're seeing some strong moves coming in on that one. What's your view, and what should an investor do? Good entry levels?
So again, it's a portfolio stock, and we have seen bank changing its gear from a corporate lender to us to a retail lender. The book is now 70% on the retail side. In fact, their infrastructure lending has gone down from almost 23-24% to almost as low as 7%. And at the same time, started working on the CASA side. CASA book is around 40%. And interestingly, Hiral, what has happened with the bank is that irrespective of they have high deposit rate for clients, their margin has gone high. So I see a very promising mid cap bank coming up. Again, there is no recommendation. This is something which we influence while doing some data crunching or while meeting the management. Our research team there, we have met the retail head, we have met Vednathan himself. So we see that a very promising bank coming up the curve, and you see Indian financial system, irrespective of whatever accounts we have seen people have opened. There's a long way. We have a long runway in front of us where we see that opportunity is big. So bank has worked on its margin. It has reduced its NPAs. Book has become more retailish. For the understanding, I think most of the people here who watch these channels, they understand. But just to make it simple, when you have more retail book, it becomes less defaulty. It becomes chances for you to have NPAs is less. Their dependency on top 20, their clients have reduced. So overall, bank is working in the right space. The credit card division is also shaping up well. I've seen their active participation across various initiatives, whether it's some health initiative or other initiative. You can actually see IDFC as a prominent name coming up now. So I see that banks should do well from here onwards, and there's the scope of growth for the bank. And again, available at attractive valuation as we speak, whether it's Axis and ICICI. Price to book is around 2.2. At decent valuation, bank it has a good run up in the last 1 year. But do your due diligence before participating into a bank.
Right. Moving on, you have a Dixon Technologies that is in focus as well. In fact, a lot of other companies, and this is mainly because a lot of companies that could be beneficiaries of Apple shifting their base to India. So you have Amber Enterprises also who's in focus, Keynes as well. But overall, if you have to look at a Dixon, how are you looking at it specifically from a valuation as vis-a-vis an opportunity perspective?
So he will. One is PLI. Dixon can be a beneficiary of PLI. Second is China Plus One, and China Plus One is real now. We've been talking about this for quite some time, but we have seen that gradual shift of some part of manufacturing of global giants, not only in electronic management system, but otherwise in various sector. It's actually happening, and we have seen many of these Indian companies franchise getting benefit out of it. Dixon is one of the players on the electronic management system side, whether it's LED manufacturing, mobile manufacturing. They're catching up really fast. They already have good book size from their foreign players, but seems like they are working on a couple of big deals, which even we are waiting for the announcement to come. Along with Dixon, many other players will have benefit out of it. So the growth becomes very big. So many of the players, let's take for example, whether it's earphones or it's wearables, they are making for boards. Many of their manufacturers have asked them to double their capacity next couple of years time because they anticipate the growth to come. So when you see all these news coming in, you see the growth prospect for these companies becoming very big. And you ask me, we are talking about export orders, domestic also. In wearable, many other parts of the business, they hardly scratch the surface. So this will become big, and they should gain from what is available right now on the platter. So we see that with diverge, they are diverging into many other lines also, and you see that growth can come at 24-25% from here onward the next 3 years. They are expected to grow their book or double their book in the next 3.5 years time. So seems like it's a good buy from here. Again, it's a part of our portfolio. But my suggestion to everyone: do your due diligence before buying these stocks. But believe me, the franchise like Dixon and many others who are in the mobile manufacturing, because India is becoming a very big hub for this, will gain from PLI and China Plus One advantage.
Right. So that's overall with regards to Dixon Technologies. Moving on, Ahluwalia Contracts has been making some noise over the last couple of trading sessions. The kind of order wins that we are seeing for this company has been pretty straightforward and good. Overall, if you see from the stock price performance, 21-22%. So it's the last 2 months where we've seen an upside, but the ride has been pretty volatile. what is your view on Ahluwalia contracts overall?
I think my first job was with Answers and Ultratech. So I'm not saying that I understand a lot, but I have a lot of good connects with this set of franchise. And being worked in the cement sector, I can tell you one thing, that the company is doing right things, although they have missed their guidance of last year. And obviously, because they have skewed their work towards government projects more. 85% of the projects have been done by Ahluwalia is on the government side. In fact, city building has been done by Ahluwalia only. But now they're getting into private contracts also more, and they want to make the book 50% each. And as you speak, being Delhi based, DLF and Puri Construction, they are marking names which have given their recent high-end flats contract to Ahluwalia. They have a book of 8,500 crore. You asked for the payment side from the vendors as well as suppliers also. There's a very good feedback which has come up for Ahluwalia contracts. Their bank guarantees and their payments are very well in time. So overall things look good, and they have given a guidance that from here onwards, because they'll have a mix of both private and public play, they should deliver a growth of 21-22% from here onwards. Obviously, there are payment delays from the government side also for Ahluwalia, so which has created a little bit of earning mismatch. But overall, you see the type of growth coming in terms of the type of mindset change which has happened here over a period of time, where people are moving to a better apartment, they're spending money, and little bit of help through your per capita GDP also will come and will push all these builders to make better houses and have better margins. So seems like it's doing the right things, what is required to be done in their scheme of things. But yes, it's a very tricky business when it comes to construction line. So if you see another, obviously it looks like that inflation numbers are very much in plug. If you see home loan rates going high, which doesn't look like, but sometimes you see the sales going down, and eventually it percolate down to many of these builders also. So my sense is that one should do their research before getting into these type of companies. But yes, as we speak, it's at a very reasonable valuation, and at 3,800 market cap, it looks like sometimes it looks like it's very tempting, but one should just look at the SWOT analysis, or do the SWOT analysis before getting into these businesses. We are also tracking this business, and if any update will come, maybe we can discuss in the next show.
Absolutely. In fact, another one comes in is a KEC International, which is seeing a good move in today's session. And this is on the back of an order win as well. Clearly, if you see the Q4 numbers, the order execution pipeline has been pretty much healthy. And on a sequential basis, they've seen an improvement on the margin front as well. Overall, Kshitiz, if you have to look at the counter at current levels, what's your read? Good levels to enter?
Yeah, I very strongly feel that infrastructure we've been talking about for the last 10-15 years, but this is a moment when things are moving fast, and we will see a turnaround story for India. And it's a very common saying: wherever there is a road which is reaching, it will lead to a lot of growth coming in your way. So KEC is participating in a very healthy way to build India, and one should look at that. It's again, this is not a part of our portfolio; it's a part of our overall research. So I see that it's a very promising franchise where they have backed a very big order recently, and seems like they are trading at a good valuation also. So my only point is that when you enter into these type of businesses, sometimes the gestation is a little long, and that long gestation in India right now, anything to do with infra, you have to look at one thing is company being very compliant, cost of borrowing, how it's working on, whether it is on high debt or not. So there are 2-3 elements which one should look at it, because eventually that is a big demand here, which creates a lot of trouble for all these companies which are into infrastructure. So I see that this company has a decent pipeline with low debt and good valuation. So one can look at participating into KEC International.
Right. Another one I want to discuss with you is a Zee Entertainment, Kshitiz. Clearly, yesterday we did see the stock come under pressure. However, a good recovery that has come in. However, the speculation does continue as to what happens with regards to the merger with Sony, and in terms of the board compilation post the merger. Overall, still, you are seeing funds which are looking to enter at lower levels on Zee Entertainment. Uh, One, from a valuation perspective, and two, from a business perspective, how would you look at a Zee Entertainment? Because one side of the story is what's happening in and around with SEBI.
So then we have NCLT meeting on 15. Let's see how things will shape up about the merger. But when you ask me the valuations are very attractive, believe me. But business-wise, they're facing a lot of trouble. All this digital media has actually given a lot of trouble. They're losing a lot of advertisement, movie advertisement, which normally used to be the main bread and butter for Zee, because earlier they are the one who used to rule, or maybe let's say Sony used to do that. So I think they are losing market share. At the same time, they are losing their contracts on the advertisement also. Now see how, if the merger will happen, then Sony has a track of running a successful franchise, and they are doing fine, because then you have, obviously there you have a cadre of people who still watch TV. So I think business for the timing is under pressure, because there is a cost which is increasing and they are not able to do that. I've seen their studios also in terms of their space is cutting down, in terms of the way they are operating. People are getting reduced. So I see there's a lot of pressure which is there. Before getting into, and many people, they must be looking at that because it's been fallen. It's a good opportunity to buy. My only request to most of people who are watching this, that they should do their due diligence before getting into businesses like Zee. Let's wait for the news to come. If this story is too good, let's say, then allow this entire dust to settle, allow the merger to happen. Maybe you'll miss the initial 18%, but eventually, if the story is good, you'll capture the upside from there onwards. So rather than looking at participating now, I think one should wait and watch and allow the merger news to come finally, and then maybe you can look at if you want to add. Because yes, if run properly, this can be really a good franchise which can generate earning of 15-16% easily from here onwards. Because irrespective of how much Netflix or Amazon Prime also, or Hotstar, you and I can watch, but there's a set of people. I can say my mother and many people, they still watch TV. So there's a lot of scope in terms of business, if you ask me. But yes, my suggestion is just hold your horses, allow the news to settle down, and then you can look at adding this to your portfolio.
Right. And very lastly, Kshitiz, Gokaldas Exports. Clearly, if you see, textile companies have been in focus as well. And one key aspect is the downtick in terms of cotton yarn prices, which will benefit all of these companies. How are you looking at a Gokaldas Exports?
So there are multiple triggers here. Not only downticking in cotton prices, but if you actually see, you see that again. I will reiterate PLI China plus one, which is second advantage, which is cotton prices. Third important point is that you will see if the trade treaty happened with UK, although 80% of their business is US, then again it will give push to the stock. So the overall market is really big, around 450 billion if you see textile export, but India hardly contribute to that, and Gokaldas is only 250 million. So the size is too small. Their main players, main clients are Gap and H&M, on which they have other clients also. But we met the team and we really like the way they are doing. The way they explain that how absenteeism also create problem in terms of productivity, how efficient machinery creates more productivity. So I've seen that, and we strongly feel that this franchise has although it has run up in the last 8-10 session, but has a lot of scope coming up their way. You see, where we lack vis-a-vis in terms of pricing is that Bangladesh has cheaper labor, which is like a hub of textile as we speak. But they have a rotation of increment which comes after 5, 6, 7 years. Not that every year happen. And maybe this is a year which, and this is something interesting which we came to know from a couple of textile exporters, that this year they will have their set of increments coming their way, where we might be able to match in terms of the pricing which they are offering. So I think Indian textile industry also will see overall revamp, and we see a very promising growth coming from Gokaldas Export. Valuations are very attractive. If you see, and we see that 18-20% growth can come from this company. Although the guidance given by the MD and the team is that they can double volumes from here in next 4 to 4.5 years time. But we are very we are very happy the way they have grown. We are very happy the entire franchise is shaping up. Overall, they have done the revamping of their entire machines and the way they are working. And they're very clear now how they want to grow, how they want to add more and more clients to their basket and cater to their clients, the existing client with a better line. So good franchise, good business, good support from government. I think we'll become more competitive. It's just a matter of time. We'll have our tax treaty coming with UK also. So everything looks good. But again, do your due diligence before getting into this stock.
Absolutely. So, a lot of counters where you are seeing some good potential upside as well as his basis what Kshitiz has been mentioning from a fundamental perspective. Thank you, Kshitiz, so much for joining us on the show and giving us those views. And clearly, there is some bit of sideways moves in the markets, but ahead of the FOMC, this is what could be expected. Tomorrow is going to be an interesting day of trade that we will be watching out for as well. Thank you. Stay safe and speak to you soon again, Kshitiz. And lots more lined up on the other side. Please stay tuned to BQ Prime. Thank you, Kshitiz.
Thank you, Hiral.
Thanks.
Always a pleasure. Thank you.
Bye-bye. Take care.